Alrighty. Alrighty. Doc from North America. It's the middle of the week now. It's Happy to Hump Day. It's Wednesday. And it is Fed Day. Mr. Powell, he's going to do a lot of dancing. It's going to be very interesting. Lots of dancing, playing a lot of fiddle. Hey, Robin. How else can we look at it? We have GDP up to 3.2%. We have the employment number coming in this week looking firm. And why would he need to cut interest rates? You see, the economy's growing. So I guess they will cut them for the political reasons. He'll probably make them feel comfortable today, but not cut the rates. The next one is in March. I believe it's in March, or it's the end of February. It must be March. Yes, of course, it's in March, and about the middle of March. And so that'll be where they're starting. This is where they all convinced he's going to do it, and we're all starting to appreciate. You can see as you look on the dollar index, 103.31, basically at 103.35. Basically, it's 32 at 36, something like that. It's kind of quiet. Markets are just waking up here in the States. And so, obviously, currency money, currency traders are looking at it and they're saying, yeah, of course they're going to cut. But it was not going to be today, and it's not going to be, more than likely, not March either. And then from there, that becomes May. Mid-May, the next potential cut. Or early May, I guess it is. And so that's where they figure, well, that'll help the election for Mr. Biden. Mr. Biden will be happy with him, so forth and so on. At the same time, not all jobs are equal in this statistic. That's the problem, is the gross domestic product. To get the gross domestic product to move up $1 or 1 full point, you have to spend $2.55. And we talked about this yesterday. If you buy something for $2.55 and you go and sell it for $1, sooner or later you're out of money. And that's exactly what's going on at this point. They are pumping with tax dollars, hiring government workers, not people who are, driving trucks or manufacturing on an assembly line, or even growing food, or anything productive, construction. They're not hiring them. They're not being hired. What's being hired is government employees, which basically produce minus nothing. Not only nothing, but minus nothing. And so, this is they're looking at the numbers. And now this morning, since we were talking about the earnings, when you look at stocks and you look at the earnings of companies, they're seeing that they're gaining, but they're not gaining a lot, and they're laying off lots of workers at the same time. Now, there's no doubt that there is what we call creative destruction, and that means that for one area of a field or technology or industry group, there'll be innovations, and that's the creative destruction. What they do is they create new ideas how to do it better, and at the same time, they lay off people who are doing it differently than what they were doing it in this new concept. It's a creative destruction thing. So instead of needing 100 employees to do something, or look at yesterday. Yesterday's a good example. UPS, United Parcel Service, they had that big, long strike. I talked to you about it. The markets were relating to it. Or not a strike as much as they almost had a strike. And they negotiated the most wonderful deal, and Mr. Biden came out, and he was so proud of it and thought this was a great deal. And then yesterday morning, they laid off 12,300 workers. Not 1,230, not 112 and 3. They laid off 12,300 workers. And so, they got all their, the ones that are still employed got that great raise. And I bet when you look at the 12,300, mathematically, I'm sure it just negates out the cost of the raise, to some level. And that's the problem, is that we need 12,300 more United Parcel Service workers and 12,300 less government workers. That's why I say government workers are not only they not a plus, they're actually a minus. It'd be different if they were just okay. But they're not okay. They don't bring anything to the economy. That's what the Soviet Union learned. That's why Evergrande and everything else in China is falling apart. Government workers do not grow economies. And that's what the problem is. Yo, Robin. Okay. Be right back. So, you look up at the dollar index this morning, and that's what that's telling us. Now, since we started the webinar, it's even up a couple more ticks. We're at the 103.33 area with a 37 offer, almost heading for 134 bids. And again, it's natural. Now, how do money managers deal with it? Well, obviously, one is they're not making a lot of money to begin with, but two, the money managers are, just cruising along, getting their 1 in 20 and just happy that the fact that they got a job. And money, there's so much cash out there, they have to put it somewhere. And so as long as they can return that cash, and we've seen the evidence of that with the quantitative easing in 2008 going into 2009, that quantitative easing made money managers so, I want to say incompetent. I think that's about the best way to describe it. So incompetent that they would buy government bonds and pay interest on the money themselves instead of the government paying them interest. And that's because they just don't appreciate the derivatives market. That's the amazing thing, is it's not that complicated. In other words, the options, the listed options and the binaries, they could have easily bought assets that paid dividends, sold the call, bought the put, created their own synthetic bond. And we all know that or at least I know, the OCC, the Option Clearing Corporation, is the largest bank on the planet, backed by the best responsible financial people on the planet. Something you can rarely say about bankers or concepts of investing and so forth. And and you can see the options industry. It grows greater every year in volume and participation. And but at the same time, very few of us talk about the options market. Matter of fact, when you're looking at the thousands and thousands of hedge funds, no more than a dozen outright are option ones. The rest are just buy and hold, or a couple, a tenth of them are shorts, that type of thing. They're investing like it's 1975. It's like 1974. They're not investing like it's 2024. They're investing like it's 1974. 1974, 1970, 1950, where you have Graham and all these people reading back in the 20s. They're reading the tape. Someone there asked about that. I guess it was about a week and a half, 2 weeks ago. They said, "Don't you just read the numbers? Why is with all this algorithm?" And I was like, okay, yeah. Reading the tape, I explained, you can't just read a tape anymore because you have listed options. They are the influence. This is why stocks or currencies move in such dramatic ways compared to what they used to do. And so that's because of the amount of volume out there. So anyhow, that is my morning rift of trying to coordinate or identify the rationale behind why we see the dollar index firm the way it is, and why we see GDP going the way it is, and how are we going to interpret how Mr. Powell is going to do today? And that's the name of the game. Unfortunately, the webinar is not going to be reflecting that, solely because it won't happen for another 6 hours from now. And so that's what the issue is all about. We're not going to see that action until 6 hours from now. And so that's the answer to that. All right. So I hope that made some sense to some of you. If it did, a smile or a thumbs up would be nice. And if not, I can dig it. I can put up with it either way. But it feels good to get this documented on YouTube and reality, over the years. It's been nice to be able to, because when you go back and look at my morning ideas and so forth and our numbers, the algorithms, you see the success rate. Can't fudge that. All right, let's get over to from the dollar index. Oh, and we're looking at the dollar. Where's the dollar index? You can see it right there on our beta. And let's move that around even a little bit more. You see there's the beta. You can see it's 4 weeks in a buy. And, it's doing what it's supposed to be doing. Our algorithm is basically picking up the future price range and telling us that it wants to go up in value, not down. Then we go over and look at it on our old platform that we're still using. We send charts out on it every day to our clients. And let's put the dollar index there. Okay, it's already up there. Okay, so we hit OK. And let's move it over. There it is right there. You see the same situation. It's been in a daily buy since back in here. And at the same time, it's been in a weekly buy for 3 full weeks. And you can see the fast is 4 weeks and almost 5 weeks back in here. The fast algorithm on the weekly. All right. From there, we're going to go over to the euro. Ooh, there's a nice little dip. And let's go to the euro right there. They tried to get into the buy yesterday, and then it's still sliding a little sideways. And you see all that red right there. So we can get the this is the fast stochastic versus a slow stochastic. It's a good way of measuring it when you don't have obviously Doc's algorithms. This is it's just a couple hours behind our work. That's all it is. It's not that bad. And when you're looking at daily charts, or even intraday charts with the same concept, you'll see how much it leads all the other public indicators like MACD and parabolics and different moving averages, and just it's much better looking at it this way. And you can see there it's at 33.4 with the slow at 30. So it's telling us that there's a little buying going on. They're trying to lift up in there when it comes to the euro. And you can see it over here. Same situation. It's trying to lift up. You can see it's been in the buy. Is that it right there? That is the dollar index. Let's get let's get it. It's been in a sell last time I looked. Let's see. Where are we? Right there. There we go. And so you can see there, it's been driving down in the sell for days. It's in a weekly sell for going on 3 weeks. You see the fast right there underneath it, those little dots. It has been in the sell since back in here. But we're not really seeing a lot of leakage. We're seeing a mild push on the downside, but we're not seeing a lot of push. And it's because, again, I think there's a lot of money that feels comfortable that there's not going to be anything too dramatic being done by Mr. Powell, the head of the Fed. So let me take a sip of my tea. That feels good after talking 14 minutes straight like that. All right, so there's the euro. You see that small pressure trying to turn up. You see it on our old platform that we use at the moment. Still, that's why we have the beta going. We're refining the beta so it'll take over for that. And so you can see right here, right there, you can see that the objective is, just mild. It's not taking out this low here. I'm not expecting much out of it. And when you squeeze it a little bit and take a look at it further back, you can see that the overall trend has been, to a great extent, on a nice upwardly run, and then we just finally slipped into the weekly sell about a couple of weeks ago. But I don't see a lot of action at this point. This could be, after looking at the earnings with the stocks yesterday, and the layoffs and so forth, this could be a very sideways down end of winter going into spring. It has that look to it. There's been some good money managers that I trust. I've seen expressing their opinions for decades, and they've been saying that now for like the last month. They probably were interpreting, since they look at the P and E, the price earnings ratios and so forth. They've probably been seeing that the major tech sector was probably going to have a little digestion going on. In other words, consolidation, and that's probably why they were thinking that. All right, now from there we'll go over to the British pound. There's the British pound. You see the British pound slid into a sell there yesterday, and we're actually flirting, as you can see right there. We're flirting with the weekly sell. But the pound, look at that long, big, envelope, channel, digestion, consolidation, however you want to express it. That's what it seems it's been doing now for a while. We talk about it, how you have this good solid consolidation going on. To me, I think that's all it's doing is expressing the dollar and the interest rates in the states to come. Not what they are right now, but what's going to happen. We're probably going to see some type of dip, but not right now. And remember, bond traders, which are it's the largest trading arena in the world to begin with. It's not a listed market. And if anybody wants to understand what the difference is between a listed market and an over-the-counter market, we can express that and explain it. But that's what it is. It's not a listed market. It's an over-the-counter market. So it really is sensitive to supply and demand. Very sensitive to supply and demand. Another sip of the tea. And so cable itself, you see the cable is just literally consolidating and almost saying, no news out there right now. Don't worry about it. We'll catch you later. And that's what it's saying to me. And then when you see, okay, yeah, it's a dollar. That's the euro, 138. Okay. For a minute, I looked up. I thought that was the dollar index. I was like, whoa, 38. That'd be way too strong, and way too much action there. Let me just go see what it is for the fun of it, since I had a flashback there. Oh no, I can see it now. Okay, yeah, it's sitting there quiet. Okay, so that's good. All right, I didn't need to put it up on the screen. So let's get the cable up on the screen and see where the two stochastics are and see how it's all moving along there. You see it just mild. You see the fast is at 42.8 and the slow is at 44. So the pressure is on the downside, and you can see it here. But think how anemic it is. It's not it's not a panic of any form. There's nothing to truly worry about. It just is what it is. You know what I don't have? I just realized I don't have Janos up on the one screen. Let me get Janos up there in case they're saying something to me and I'm not hearing it. So from there, we go over to, which was, I feel a little sad, and that is that I didn't realize that the Swiss National Bank had not been fighting inflation. And so now they are. And so that good action that we saw for so long, for like the last 6 months, in the Swiss has kind of, let's say it's resting. It's doing the consolidation also, because the Federal Bank of Switzerland is fighting inflation a little bit, and they're trying to calm their currency down. And let's put that up there. Right, dollar Swiss right there. You're just hanging around that 86. Let's put it up on the other platform. Right there. You can see it's in daily sell for, was that 4 days now? 5 days. No, wait a minute, 6 days now. But it's in the weekly buy still. So it's trapped in that neutral thing. And it wouldn't surprise me that we may see this, the way the cable is, like this. Let's just put the cable up there. With that long sideways action since late November. That may be we may come back to that. I mean, every day we look at it, but we may see this, in about a month from now, going, "Wow, look at that! It's doing, it's doing that same consolidation, and that would be, it looks like maybe it's starting to do that, and maybe we'll see that consolidation all the way out through February like this, where it just doesn't go anywhere. And you can see here we have the okay, so we can get rid of that. We went into the weekly buy last week, and it just seems to be, just extremely firm over it. They're not backing off. I can imagine this just kind of chugging along like that. Not really making much action out of it all. I could see that. That would make a lot of sense to me. All right, now from there, we zip the do over to the yen, and for this morning, no news on the LDP, so I'm happy. I'm not even going to go any further than that, because every time I turn around on Nikkei News, that's all I see. And let's put the dollar yen up there, right there, and it's doing that little consolidation thing. You can see it at 61 on the fast, and 53 on the. Is that 50? Oh, it's 51. I'm sorry. Let me just. Yeah, 51. So it's just a little bit underneath, a little pressure on it. You got two red hinkies there. Over here. Where's that? There it is. And over here on the other platform, we have right there. You see that same situation. It's been in the sell. It's trying to do something. Now it's giving us a little volatility signal of a green and a red. At the same time, it's in a buy for 3 full weeks now, and it's pushing up. But it wouldn't surprise me if a lot of these major currencies start to do the sideways thing. Do that consolidation. And so we're going to, I guess what it'll be is tune in once in a while and see. Look at we'll see what's going on. But it would not surprise me. And then again, Mr. Powell is probably laying the groundwork for that exact thing, so that everybody feels like, okay, we know where the cuts are coming, and they're not now. And then we'll start to see how they play out over the next basically 3 months from there. Let's see, we're basically almost February, so February and March and April, and going into May, we'll start to see how if they're starting to head. The bonds will start to recognize if the cut is coming. Also, like I said, one of the big problems we have, as I said in the beginning of this webinar, is that the GDP doesn't reflect a growing economy. It just reflects an economy that's increasing due to government employment. And that makes it very tough. That's why you're seeing all these massive layoffs, and earnings are just not exactly exciting everybody when it comes to these major companies. And that's it. That's what it is. All right. Now from there, we slide over to the Great Experiment. And there it is right there, the Great Experiment. They had a good high out of it yesterday, but still in daily sell. The closing high today, the all-time closing high is not far with the way this thing is transacting. The closing high is 33.04, and we are at 32.92. So this thing, you can see the action of it. There goes 92.74 is the last trade. Let's see what the next one will be. It could be 20 down. It could be 6 down. It could be any of that. Actually, it's trading very quiet compared to yesterday. Still stuck at 74. Let's see. We'll wait and see what the next tick is. They're 85. So it ticks. There was 11 points in one tick. Now there's 6 points down in one tick. So this product has the ability. 11 points now. It went from 74. It's 5 ticks down at 69. 62. Now it's 7 points down. This thing can, in 10, there's 55. There's 7 points again. This thing could go 10 ticks in one direction, and the next thing you know, you're at like 93.50. It's nothing for this thing to go flying. And that's look at that. They just went from like 52 to 72. This thing can, for it to get to 33.04, doesn't take a lot. I mean, it's as big as the number is. It can just fly. Let's see what this last one is, and then we'll go over to the. We're going to take. Oh God, that was a 16-point tick. Yeah, so it doesn't take much to get this thing up to 95, 96 out of nowhere. We go over to the. What we do is we look at the South African rand. We consider that obviously we don't have a choice. We look at it as the most active liquid brick currency in the world. And I know you're probably saying South Africa is not as big as China, or South Africa is not as big as, well, maybe it might be bigger than Russia. I don't know. But, people obviously are confused a lot about the China market. Over 30% of their GDP is based off of real estate. And we see the whole real estate sector literally going bankrupt at the moment. So, but next quarter they'll reflect a GDP of a point up, or not a point, a tenth up or a tenth down, and people will be, oh, okay, yeah. Then how did you just lose 30% of your GDP, and somehow or another your GDP indicator itself reflects a gain of a tenth of a percent, or a loss of a tenth of a percent? That's going to be fun. That's what happens when you have central committees, running an economy. They make it pretty entertaining to see how they're going to sing the song, tell you the story. It's going to be very fun. All right, from there we go over to the brick. Let's see what the number one brick looks like. And there it is right there, ZAR. You can see it's had a downwardly slope for like the last 6-7 days. And you can see it's in a daily sell. But again, we're also in that trapped going nowhere thing of being in a weekly buy now for a full 3 weeks. And so when the South African rand is going down like that, which means it's gaining against the dollar. When it's rising like this, it's losing against the dollar. Okay? So when it's going down, it usually means that gold is going up and silver's going up and so forth. So let's go over to that area and take a peek. And there is... That's not it. yeah, there it is. Right there is gold. You see gold is up on that upwardly slope, like the way the South African rand is on a downwardly slope. Now let's put the South African rand over up on J4X so we at least have a view of the action. Right there. And you can see there's that downwardly slope. As a matter of fact, you can see the fast stochastics at 19.4. And the slow is at 15.7. So it's trying to turn up, actually. We're starting to see some strength come in. When we look at it over here, you see it moving down. So chances are the odds are something like 8.5 out of 10 that the J4X will join in with us, not we will join in with the J4X. All right. And so we get back to the right there. There's the gold. Yesterday was a nice spike up, and it's really holding on with a very thin thread, I would say. And it's in the weekly sell, too. It's been in that weekly sell since over in here. It's been pressing down, and it's basically gone nowhere with that weekly sell. I mean, it went down a little bit, made the lows there on it, and then, because we only put the line in at the end of the week of it, or where it connected to. In this case here, it didn't take out this low, and it's trying to lift up, and the daily buy is trying to tell us to be careful here, since it went into the daily sell here at the 2100 area and has gone all the way down to the 2100, and then the went into the daily sell and has gone to a low of almost 2020, so about an $80 drop. And now it's trying to churn and burn a little bit on the upside, and so far not doing too good a job, but it's it's sideways firm. Usually also gold and silver and so forth go up when they see lower interest rates, and so that's kind of insinuating that they believe lower interest rates are around the corner also. All right, so from there, and we'll do a little save there just to freshen it if somebody asks me for a gold chart. Let's take a look at silver. And there's silver. It's been a little bit firmer. It's been in the daily buy for going on a 6th day. The weekly is trying to turn, but and it's caught up to where it went into the sell up in here, and we're now finally challenging that. But we've been in a daily buy for about 6 days, so we knew that there was strength coming in. You can see on the weekly algorithms, they're just not really kicking it up much. The fast is trying to get to the 0 line. It's through the manifold here. These are the manifolds, nonlinear time manifolds we call them. They're a combination of our mathematics, and they have a very strange time component, and they're a standard deviation of that whole thing. So it's like a Bollinger Band on steroids. It reads the markets much more efficiently. Alrighty. So from there, that's the silver. Let's take a look at the copper. Oh, and let me save that too. There we are. And there's the copper. We've been impressed. We're very curious. That doesn't belong there. We've been very impressed with the way copper's been reaching. We kind of think there's probably, since the real estate market is collapsing, they're just buying copper because it's a safe haven instead of being invested in real estate at the moment. Now, I would assume that if it was me over there, I would have never been trapped in my real estate position to begin with. But then you're not really in control of your destiny as a businessman over there, because the party apparatus is the thing in charge of it all and can change rules or throw you in jail just for not following what they want. So it's hard to say exactly, but I would think that money would reach for copper because it's a lot cheaper and easier to control than a piece of real estate at this point. That's the only reason I think we're seeing that strength. Now, they also did at the same time, they're doing, I forget what it is, about $120 billion stimulus package for the economy. The United States does a stimulus thing. It's like $2 trillion. China did a stimulus package. They did a 1 trillion won stimulus package about a week and a half ago. And that equates to about $120 billion. That's not a lot for the second largest economy in the world. Especially if it's supposedly an economy very close to taking over or competing with the American economy. It should be at least, I don't know, it should have been at least something like, I don't know, maybe 10 trillion won, something like that. Maybe 14 trillion. They only did 1 trillion won. That's it. So it's the only way we can learn how they are really working. I myself, and we can show you this too. We'll give you a quick flavor of it all. Let's go over to our beta and look at the Shenzhen index, and we'll put that up on the screen. Just we're not out trying to beat China up. We're just trying to understand how to make money there. Do you commit capital to it or you don't commit capital to it? To me, no. You don't commit capital to it. You're going to be punished for committing capital to it. So, let's see, where is it at? Right there. There's the Shenzhen. You see, we're making another low again. This is, where is it at now? It's like at the 8,000. Let's do this. We'll make it bigger so you can see the numbers. And so we're looking at Shenzhen trading at 8,220. The all-time low, I believe, is the 7,000, like 7,600 or something like that. And so, I mean, obviously, they are, and they are something like 65% below their all-time high. The all-time high is in the 20s or 30s. We did that yesterday. We went in and looked at the Shenzhen and looked to see where it was. And let's see if we can, let's put that up there too again. I thought that was interesting. The Shenzhen, we were like, wow, we know that they're in trouble financially. And so, we have a media here in the United States that really loves China. Matter of fact, I think it's the best way to govern, which is really strange. The corporate media loves China. And so it's kind of confusing when you see, their stock markets and stuff like that down at such a low rate, Let's see, where is it at? right there, Shenzhen, 399. Okay, so let's go back to it again. 399. There it is. And there's the index right there. And then you can see it's 8,212. And then let's go back to its maximum chart and make it the whole screen. And you can see when you shrink it up, it was up in the, I think it's further back. Maybe it's monthly. Yesterday we saw that. Oh, maybe we have to expand it. That's what it is, like that. There it is. So we're looking at an area of about, I guess it's about 1,800 and something, 19,000, I'm sorry, 19,000. And it's trading at 8,000 right now. So you're talking about well, 3 times 8 would be 24. So it's not a 66, it's more like a 57% low from its all-time lows. And I think actually we made the title yesterday that it's like a Gann triangle going on, and probably has to go a little bit lower to get itself figured out in the end. Let's see if we can show you that triangle again that we were looking at. Yeah, we're looking at this last triangle from there, like in this case here, 1, 2, 3, 4. Oh no, it must be one more. There it is. 1, 2, 3, 4. Took out that low there to give you the 4th point, and there's the 5. And what's interesting is that it should have probably gotten up to about that area right around in there, and it didn't, and then it collapsed even more. And the bigger question is, will it come back down to these? Actually, look at the lows. The low no more than 2007 was 2,700, and we've got plenty of room on the downside. The poor thing is really getting clocked. All right. So from there, that's why we look at the copper, and we look at try to understand what's going on financially over there. It's not that we choose to beat up on China, as China is beating up on itself, and all we can do is read. You know how they say it in poker or card games. You deal with the cards that were dealt you. In this case here, we're watching this go on. We couldn't understand it months ago when we said, how did they go from having 11 billion in a note, notes and debtors, and they couldn't even find $15 million to pay the interest payment. And now we find out, going into Monday, on Monday, that the courts in Hong Kong just told Evergrande, liquidate. You have to liquidate. You don't have a choice. And they owe $33 billion. And if they can't find, $45 million anymore to take care of the 33, or like they did a week ago, where they could, or 2 weeks back, they couldn't find 15 million to take care of 11 billion. It's going to be a real issue. Wouldn't you would reach for copper? It's a lot easier. It's easier to hold, easier to move. You can, let's say, you can transport it without a lot of people seeing it. You can't exactly transport large tracts of land and buildings, and so no wonder we're seeing the copper, showing such strength, is because it's a really good asset class for them over there. I mean, they can move 1,000 pounds of copper and know that they're going to get, be able to sell that copper and get money for it. Whereas, right now we're seeing a third of their whole economy just disappear, just gone. You won't hear that much on the U.S. corporate media either. They won't tell you that. They just want to tell you how great China's doing right now. They're saying, oh, it's a little slow right now. Yeah, but they just lost a third of their economy. All right, from there, and let me save that. That's how we're interpreting the movement in copper. We go through a lot of things here. And if anybody wants to get focused in on any one thing, just let us know and we'll get involved in it. I don't have to do all this. It's nice for me to document it, though. It's fascinating. Right there's platinum. And you can see platinum's been holding up fairly well, Again, we think it's so undervalued that it makes it hard to believe anybody would even dare try to sell the thing without owning it first. Shorting it just sounds like a scary path as far as I'm concerned. All right, that completes the metals. All right, from the metals we'll go over to the energies, and so we'll throw. There is crude oil there. You see it's in a daily sell for a third day. It's not really gone anywhere. Let's put up Brent up on the beta. Maybe that's it. That's the beta right there. And so there's Brent. You can see Brent is flirting around the $82 area. Let's throw it up on J4X. Right there. Trading at 81.34 at 81.39. Let's see. BZF might be the February contract, and I would imagine we're looking at the March contract on J4X, just like we're looking at the March contract on crude oil. And so, probably another day, and they'll shift the that at the same time, and that'll, probably lift up a little bit. Let's see what. I don't even think we have back months per se. Let's see if we can see what the back months look like. So right now we have crude oil. Let's see, where's it at? Right there. So we have the front month crude oil contract trading at boom, there it is. At 76.86. And we have the April contract trading at 76.66 basically. So that's 20 cents discount, and then a 14-cent discount on the May contract and so forth. So it goes down in price. So right now there's a little more demand in the March contract. And I imagine if we could get Brent on here, I wonder if I can get Brent back months. Probably doing the same thing. I don't have I didn't look on ICE. I got to go look on ICE. But you can see that the Brent has been climbing and is probably going to start to turn. You can see the fast algorithms at on stochastic on J4X is at 61.3, and the slow is at 75.7. So this thing's getting ready to go red. This has already turned right here. So we're seeing that pressure on the downside. And at the same time, let's just show you what it looks like on right there. There you go. You see that? You see that it's pressing down into the sell, and it's still in the weekly buy, and it's just slowly drifting into that, that's weekly sell action. What else can we say about that? That's the more than likely that definitely is the March contract for sure, because they don't have a Feb contract anymore. It expired already. So that's where we are with the energy sector. And as you can see on our old platform, let's just go back to it. Our existing one that we use at the moment, the old one, right there. You can see it's trying to leak, and the weekly's still up like in everything else, showing strength. But this is turning. And yesterday it was at 79.9. Let's call it 80, and that was at 80.12. Or 85.12. So it's been breaking down for 2 days now here. You can see it with the stochastic, the fast versus the slow. And we'll see that Henke ASCII bar start to make its turn. So just as we've been in the sell on that March contract that you can see there for 3 days, you can see at least on J4X it started doing it. And then you could go one more. Let's see. I think that's it. Yeah, but let's try that. That is at 80. 60 basically 80.6, and that is at 85.12. So for 3 days the stochastic itself is telling us it wants to break down. We're just not getting that break on the Henke ASCIIs yet. It's just been dragging. All right, so you can see the J4X, at least the fast slow stochastic combination is keeping you honest. You know not to be long. You're not short. It's just telling you not to be long, not counting the fact our weeklies are in weekly buys, so there's no reason to want to try to short the thing. You just want to take your profits at this point, but not short it. All right, from there We go over to the natural gas area right there. That's kind of stalled out, but it's in that sell for, and this is the March contract. See the pressure there. You see it was drifting down into a weekly sell. It seems to have stopped, and now we are back up above the zero line there. Let's put it up over, let's see, what's that? Private sector jobs. Ooh, okay. Interesting. Let's take a look at, I'm going to put natural gas up there. And then from there, like that. And then from there, I'm going to save that, natural gas. And I'm going to go take a look at the stock market since that came up on the J4X. Let's see if it's having an effect on the stock market. There's the intraday charts. That number has pushed them and created a bottom in here. You can see it's put, this is the 900 tick. You can see it's set a bottom there. We went into the buy right there above the zero line. Went into a sell right here. And now it's been back in the buy since right there. And it's been climbing. And just drifting around now. So it came off from a, was that like a 22 low or something like that? The low was, where was it at? I think the low was 22.50. So, and now we're back up to almost 31. Got up to around 32, so it moved 10 handles up on the S&P 500. And you can see they're all trying to turn the longer term ones. This is the 26,000 intraday tick right here. And this is the 20,000 tick right there. It has already gone into the buy right there. All right. Or is that the six? Yeah, that's 20. That's the 21,000. That's right. And the other one is the 26,000. All right. Now from there, we jump over to 2222. We go over to the natural gas company down in Spain. It's the only way for us to be able to view what's going on in Europe, basically. And there it is right there. Still, it's under 24 again today. Let's put it up on the screen here for you on Dukascopy. There it is there. 24.99s are offered. 93s are bid for. And we're seeing that situation there. You can see we've been in a daily sell since right here. Oop, right there. Oh, you can't see that. Let's put it up on the screen. There it is right there. You can see we've been in daily sell on this product since, where's that mouse again? Right up in here. Right there we went into the daily sell. And you can see what happened with it. And let's just go like that again with it. Where's the X at? Right there. So we've been in the sell since that spot right in there. Can you see that? I don't know if you can see that. Maybe I need to do this. Right there. Okay. So it's been in that sell right here. Right in that area. Yeah, there you go. Now you can see it. And we see the weekly, it's been in the sell even further. Well, since for the last 10 weeks, it's been in a sell. So it's been in a sell, I guess, back in here. You can see it's drifted into the sells, drifted into the sells. This one was even longer. And it's been finding a way to go down from the 28.5 down to the 24 or 70s or 80s or something like that. And what is that low there? Let's take a look and see. That low was 24.80 and change. There we are. All right, so at least the energy costs are moving down in Europe when it comes to natural gas, even with Mr. Biden trying to confuse us all and tangle us all and not sure what's going on with him trying to cut exports of natural gas. Hey, if people want it, sell it. We got plenty of it. All right, from there, all right. So from there, what do we got? We got. What's next? Let's take a look at. Like I said, we were looking at the stock indices. So let's go to Asia first, and we'll put it up on the beta there. You can see it. The Nikkei lifting up a little bit, up a couple hundred points today. It's in a daily buy for a few days, and it's in a weekly buy now for over 6 weeks. And we've seen this index go from the 33,000 up to the 37,000 from it all. From there, we go to the Hong Kong. Hong Kong's holding on. I'd like to say much better, obviously, than the mainland. The mainland stock indices of instead of Hong Kong companies, just you can see the rule of law seems to be somewhat still held up in Hong Kong. You know, they did force Evergrande to liquidate. And so you can see Hong Kong looking very firm. It's been in a sell for 4 weeks, and you know, rightfully so. I guess this might have been the real estate collapse in Hong Kong. They read it probably, you know, and it fell from 115 down to the indexes in the 95 area. So that's a pretty big drop. That's over 15%. No, not 15%. I'm sorry. 6%. It's a 6%, 7%, about 7% drop. A little more than 7%. So that took a collapse there over since January 14th, I guess you could say, or the week of January 7th. So when we go to the Shenzhen again, and we see January 7th, it was at 9,000, and now it's trading almost at 8,000. So that's about a 12% drop. Is it 12? 9? 10? No, it's about a 9.5, 10. It's about a 9.5% drop. So it's a little bit more than Hong Kong, but just not as dramatic because it's been in that slide for a while. And that's been in a weekly sell, not 4 weeks like Hong Kong, but a whole 10 weeks. So Hong Kong was picking up on the noise late in the action, I guess you could say. Maybe they were surprised that they were able to get away with voting on it. Maybe they thought the government on the mainland would have stopped them, you know, but they got away with it. They are demanding for their money, and the courts held it up. That's really impressive. All right, so that, and then we go over to, now we understand why the Kospi in South Korea has been having such issues. It's been rolling down the same way because they knew that the China real estate market was collapsing. And so it fell from 2,660 all the way down to 2,440. That's a pretty big drop. That's over a 10% drop. So it took it really on the chin. And now it's been bouncing back now that the courts have decided what they're going to do, which is nice. And that's the good thing. Is then you can see it's been in a daily buy for a few days, and you can see this weekly sell of the last 5 weeks is calming down, and we're trying to turn up. And wouldn't surprise me if they, you know, now that it's clarified, we don't know the exposure, you know, because we don't really see a lot of South Korean news. But we do know it's a very solid economy. So, you know, it kind of gives us a heads up of what's going on in the Asian arena. All right, from there, I guess what we do now is we'll go take a look at the European stock indices that we have up on the screen. And if anybody wants to see another one, let me know. And I think we should, as time goes on, we should try to find another Asian or two, maybe like the Australian stock indice, and see how it follows with the, you know, the northern, I guess you could call it like the northern partners, or is it the southern partners? How do they look at that? When you're in Australia and you're looking at China, I would think that's like northern to them. And so that's one thing we should look at. And we'll go right now over to, there's the DAX. I think it's the Zetra. You can see it's been in a daily buy for 4 days, showing a little weakness today. And you can see the weekly is trying to lift. It went into the buy last week right there. And you can see it, you know, it's accompanied that move up. And we seem to be up at these highs. So it's following like the Dow Jones Industrial Average, whereas the S&P 500 and the Tech 100 are really having issues about their action there. I'm trying to figure out what a title should be since we're already at the end of the webinar here. So from there, we'll take a look at the CAC 40. There it is in Paris. Also doing the same thing, being in a daily buy for a few days, 3 days now, and a weekly buy for 2 full weeks. And it's been climbing just the right way. And then we go over to London. Look at the London Stock Exchange. You see that's been in a buy for 7 days. And it's been climbing up just the way it's supposed to. But what's interesting is the weekly has not joined in. So you've taken, when it was in this sell from here up in this area here of the 7,700, fell all the way down to 7,400 and has gone into a buy, and they seem to be buying it, but the weekly, maybe tomorrow will be in the weekly buy. It looks like this week could end up into the buy, and maybe that's going to be a sign of strength coming. There's not much more that can be said about the FTSE and Europe. And then from there we go over to the US. We take a look at the S&P 500. The S&P 500 had been running the same way as the FTSE and in a buy for 10 weeks. And then the Tech 100 today, you can see the pressure on that. And let's take a look at it on the old platform at the same time. Let's see what mouse is that? Right there. This is definitely up to date. Right there. And I guess it's been in the daily sell now for 6 days, but the weekly is still holding up. And it's not fallen that big, It's not taking out this high right here. But that pressure is there. Then we'll take a look at the granddaddy of them all, or the great lady, if you want to call it that, and that is the Dow Jones Industrial Average right there. And that's just roaring along to all-time highs again for like the last 5-6 days. And it's in a daily buy for the last 5 days there. And let's see, go like that, and like that. There we are. And then you can see the weekly's been in a buy for since the beginning of end of October. It's been in a buy. All right, traders, we're out of here. This is Doc from North America. Catch you all tomorrow, same time, same channel. And it'll be Thursday, the day before the end of the week. So happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart day. And remember, it is a Fed day, so don't be too brave. Wait for the numbers. Don't get too nuts, you know what I mean? Ta-ta for now.